Hello, Mark Sturdy here with highlights of 7 Days Ahead's research for this week, June the 14th, 2022. Just let's look at the summary quickly. And we'll see that even though there's short-term bearishness around all currencies against the dollar, there's only one currency that we feel is an ongoing long, medium, and short-term trend, which is in the yen. Let's just quickly, actually, rather than look at the yen, I'm going to look at the dollar euro because it's interesting what's going on there, why we're not, even though it's short-term bearish, why we're not long-term bearish. And this really tells you it's a wide trading range. And until it breaks this range, this monthly range, established since 2014, really, some 6 years, unless it can break the 6-year range, we are not unambiguously bearish of the euro, even though short-term it looks very bearish. For example, here is the bear trend over since the beginning of 22. The market being repelled by prior lows, classic, nicely structured bear trend in the weekly chart. And in the short-term chart, we've got the failure at this prior low resistance, the completion of a double top, a day key revert, all of which suggests certainly a move down to there and probably through 103, the recent low. However, just to repeat, the reason why we're not unambiguously bearish is that we need to break 103.40. This is 103.48. So if we do break the short-term low, there's a good chance that we're going to break this very long-term range. And that would be exciting. Of course, we need a monthly close to establish a break of a long-term range. Let's go to the S&P 500. Why are we so bearish? Unlike the other markets, here is beg pardon, let's just go there. Here is the pullback from the high, which is a fairly unambiguous bear retracement from a very long-term accelerating bull market. We think this is going further. The market's failed. This retracement failed at the prior resistance and the prior lows, and so we think the bear trend is well constructed. And here again in the short-term chart, we have the day chart failure at these prior lows. A break. Anxious bears might want to wait for a break of 38.10 in the September contract, but we are pretty bearish in any event. Just quickly, why we're not yet bearish of the Euro Stoxx 50 is because the monthly chart, obviously the market has penetrated the very long-term supports, but we need a close on the month in 2 weeks' time to, as it were, establish that. Less anxious bears might look in the medium term for the completion of this potential, not yet, but potential continuation triangle. So a close beneath 3,500 on the week might give them sufficient evidence, even though we haven't waited for the end of the month for the close here. A close beneath the completion of this bear continuation triangle might give sufficient evidence for bears to get going on the close on the week. There is evidence this morning that here's the daily chart in June. It's already broken that the triangle. And here is using closes. This is the September contract. Make no mistake, this is quite a bearish triangle once it's completed, suggesting moves down to beneath 3,100, which would be about 30% off the absolute high. So we are, shall we say, full pregnant with possibility in the Euro Stoxx for brave bears that might want to get going on using the week chart, which suggests the completion of a bear continuation triangle. Let's move on to bonds. We are bearish across the board. Why are we bearish? Because these trends are very well established, they're going strong, and they have broken their short-term levels in each case, suggesting further fast moves, lower in price and higher in yield across the board. Here's the German Bund. Looks like we next stop to 2.08 or 2.09% yield, and similarly with the gilts. Oil is the unambiguous bull market here. This is the quarterly chart. The weekly chart may be sufficient bullishness for some, looking at this continuation head and shoulders, suggesting very much higher up to 160. Here we are, the short-term chart breaking and holding above the prior high, so that for the moment, here's the day chart. we have good support at 116.43. So aggressive bulls want to be long here. Cautious bulls might want to wait longer to see how on the pullback to this support whether it holds. But we are bullish. Thanks very much.